My name is Evelyn Kachingwe from NBS Bank Transaction Products and Services Department, specifically retail lending. NBS Bank is offering a number of loan products, namely the personal loans. We have the cash secured loans. We have residential mortgages. We also have seed finance. But topping the list, we also have the instant digital loans. The digital loans, we have what we call the Kachangwe payday loan. We also have the Kachangwe personal loan, the personal loan top-up as well. We call it Kachangwe Kenanso. And then we also have the instant overdraft facility. There are actually two ways how a customer can apply for a loan through NBS Bank. A customer can either choose to go through the manual way, where he goes to the service center with a payslip, a utility bill, as well as a national identity card. Or a customer can choose to apply through our digital platforms. We do have what we call the instant platform, where customers can apply for a payday, a personal loan top-up, as well as an overdraft facility. For instant loans, they simply have to have a national ID, but also be registered on either Easy App or Easy Mobile. With the Easy App and Easy Mobile, it doesn't need scanning the national ID, but for those applying using the website link, then they need to be able to scan a national ID and proceed with the other steps and processes. Basically, when it comes to deductions of loans, once a customer completes an application form and submits, the process has taken place and approval has been done, the customer consents to a particular date where a deduction has to be made. For a customer who has applied for a loan through the instant platform, it will indicate the deduction as well. In this case, it shows the customer an installment and a particular date where the installment is supposed to be done. So basically, the deductions are done monthly. It's once off every month up until the rest of the tenure of the repayment period. Usually, the installments are affected by the changes in reference rates. Where the reference rate has gone up, a customer will experience also an increase in the installment. So I will give you an example, maybe where a customer applies for a loan and the initial installment was 80,000, but where the rate has gone up, it may also increase the installment from 80,000 to maybe 84 or 85,000. Basically, what happens where the reference rate has decreased, the installment will also go down. In this case, if the customer was paying a little bit higher and the interest rate has gone down, it will also decrease the installment. In the event where a customer walks into the service center and would like to apply for a loan, I would advise that customer to understand the terms and the conditions of the loan. Basically, we do have trouble maybe getting customers to understand why some changes are there in terms of the deductions and the installments. I would urge our customers to ask our consultants sitting in the service centers to explain a little bit more on the changes that happens during the period where they are paying the loans. But I would also urge our customers to be able to know the processes and the procedures from the point where they are applying for the loan to the point where the loan has been approved and they've started making their payments. In terms of the digital loans, I would advise our customers to also know or be familiar with the processes and the procedures, and where they're having challenges, our call center line is open. They could always give our customer call center team a call just by dialing the 322, and they will present their concerns, their inquiries, and all the questions which they do have.